Warren Buffett every year puts out a letter to his shareholders. You can go on to berkshirehathaway.com and get it. There's no pictures. There's no nothing. It's just about 20 typed pages, okay? And it is the best reading you will ever do in your life as an investor. And you can go on to the Warren Buffett, berkshirehathaway.com website, and I think you can go back and read the last 20, 25 annual letters to shareholders. It is incredible the kind of information that is really, really good in there. So I'm reading the letter, and by the way, of the 20 pages, you're only going to be interested in about 4 or 5 pages, because the rest of it's just all kind of mechanical stuff that's in there. But it behooves you to read the whole thing so that you don't miss the gems. For instance, I was reading the letter, and I saw a little note, just one little thing in here, where he was talking about some of the work that he does with his business partner, Charlie Munger. And he says, basically, he pointed out that there's been some volatility in recent years that made him kind of question his investment strategies and where he's going. And it says here, basically he said, then I read chapter 8 of Ben Graham's The Intelligent Investor, the chapter dealing with how investors should view fluctuation in stock prices. Immediately, the scales fell away from my eyes, and low prices became my friend. Picking up that book was one of the luckiest moments of my life. So I thought, I better get it out, because I've had this book forever and ever in my library. Actually, this is a newer edition of the book, and I would suggest anybody that wants to get serious about investing. This is not easy reading, okay? This is not easy reading. But this is, I think Benjamin Graham wrote this book in the 1930s or 1940s. And this book came out a few years ago, a revised edition with a guy by the name of Jason Zweig. And what Zweig did to help us all out is he printed every chapter from the original book, and then he wrote a chapter explaining what the heck he just said, okay? And it is really fantastic, really fantastic. So I said, I better go to that chapter and revisit it. And I did, and I'm just going to read you one paragraph out of that chapter, and it really just kind of sums it all up. The investor with a portfolio of sound stocks should expect their price to fluctuate and should neither be concerned by sizable declines nor become excited by sizable advances. And by the way, this was written back in the term where everything was written with this next word. He should always remember that market quotations are there for his convenience, neither to be taken advantage of or to be ignored. He should never buy a stock because it has gone up or sell one because it has gone down. He would not be far wrong in this if this motto read more simply, never buy a stock immediately after a substantial rise or sell one immediately after a substantial drop. Okay? You buy quality and you hold on to it. Now, Benjamin Graham, if you're not familiar with him, is the guy that taught Warren Buffett how to be an investor. Okay? He was a professor, and Warren Buffett went to school at one of the Ivy League schools, I forget which one. And really, that's where it all began. And Buffett then went on and had the career that he's had, and it's been phenomenal. But that's a good book to read if you really want to get serious about investing. The Intelligent Investor